Welcome to Breaking Banks Africa. I'm Matteo Rizzi, and together with my co-host Nadine Doro, let us take you on a journey of entrepreneurship, innovation, and vibrant ecosystems Africa has to showcase. More than 1 in 4 people will be African by 2050, this continent being already the youngest of the planet. You can't miss these stories. This is Breaking Banks Africa. Let's roll. Hey guys, welcome back to Breaking Banks Africa. This is the amazing episode number 1. I'm Matteo Rizzi, the executive producer of the show, and you will see who I picked for be my first guest in this podcast. Ladies and gentlemen, meet Carmelle Cadet, CEO of EMTech. Carmelle, welcome to Breaking Banks Africa.
Oh, thank you. It's an honor to be your first guest.
So Carmelle and I met, in the most disparate places, from New York to Barbados recently, and we're going to meet in a couple of weeks at the Inclusive Fintech Forum in Kigali. So tell us, besides traveling the world and preach the good digital assets and crossing a financial inclusion world, what is EMTech and what do you do, Carmelle?
Sure. So thank you so much for having me. And EMTech, at EMTech, I like to think of myself as having a crazy idea of remaking financial markets. And we do that with technology for 2 reasons. One, I personally believe that everyone deserves access to good and inclusive financial markets. And the second thing is, it doesn't help to build financial markets that don't provide good financial products that impact lives. Access to finance is so important to everyone, whether it's health, survival, even sometimes, good education, career, wealth building, quality of life. And however money ends up changing over time with technology, and we've always seen the evolution, that factor of value, that storage of value, that means of being able to trade with one another, and now is becoming more global, that's going to continue to be important. So we think there are some amazing technologies. And when I launched EMTech 6 years ago, it was the big bet, right? That blockchain, AI, distributed ledger technology, Web3 as a whole would be quite a transformational era of our time. And so I feel very privileged to be alive right now.
Carmelle, your story deserves to be shared. Tell us a little bit about yourself. You're Haitian, right? You live in several countries. There is a lot of America as well, in your day-to-day life. What links you to Africa?
Well, I was born and raised in Haiti. And I like to say that there's usually close to a straight line, if you look at the global map, that you can draw between West Africa and the island of Haiti and the Caribbean. But I was born and raised there, and I became fascinated by financial services, of how much there was of it when I migrated to the US. So my mom we had a middle class life for Haiti standards. I went to Catholic all-girls schools. I like to think I was a good kid. But we left because of political upheaval, and we couldn't have a life anymore. Get into the point where my mom had to choose sometimes on whether she ate or I did. And the ability to move to the US was such a privilege. We came, and the first advice that they gave my mom was, take every credit card they give you because it helps build your credit. And that was the first lesson into financial market, right? Kind of, how do you get access to credit? How do you build? Why would people lend you money if they don't know if they're going to pay you back? Such a very basic contractual agreement between two people who exchange value. So I didn't know what to do about it yet, but I always questioned, why wasn't this available in Haiti? Why is this only available in America? And, my mom used to hear me talk about this. I was like, get a job, go become a doctor, a nurse, and so on. But I ended up at IBM. And IBM really changed my life and understanding the power of technology. I got really lucky. I started as an intern. A friend told me about an internship program. I happened to apply for it. And my mom was shocked when I got in. It's like, are you really that smart? But I got in and it changed my life. So I had an appreciation for technology and ended up working on amazing software programs at IBM, seeing how technology can impact. So marrying my passion for financial services, understanding how impactful technology can be, had the opportunity to do treasury, do risk management, and build financial technology at IBM. When they asked me to launch the blockchain division in 2017. So I became first time deputy CFO, and for me, the rest is history from there.
So that red thread that sort of unifies, and I completely agree with you, the Caribbean region and Africa is also sort of witnessed by the fact that you have your approach is through central banks, right? So you're building software for central banks, and I believe your approach is very smart because you are at the root of the regulation of financial services and you choose specifically digital assets as the mean, to an end, and an end being the financial inclusion. And
Mhm.
actually, you have, you can tell two very compelling stories, right? That MTech is at the cradle of two central banks, and I'll let you tell the story. But one is in Africa, and the other one is in the Caribbean. Two of the two regions that you would not expect being at the forefront of this type of initiatives, and yet they choose that path to
Mhm.
foster financial inclusion.
Yeah.
That's exactly why, or part of the reason why, I think that the story you can tell to the listeners of Breaking Banks Africa is the story on how this quantum leap that technology can make, and sometimes it seems impossible, but you actually tell the story that tell us that it isn't.
Yeah. Yeah, it is not impossible, but I totally understand why it seems impossible. And one of my favorite lines, I think it was Nelson Mandela who said that, it's hard to tell these days, but everything is impossible until it's not, right? And I
Until it's
truly
done,
believe
I
that.
think.
Is
Yeah,
it?
or something. I think like that. But yes, I'll.
I,
Well,
I truly believe that, and I've seen it happen now, that you can't tell me otherwise. And what you're tapping into is essentially how we got into this space. The understanding of financial services, me understanding the red tapes, and then watching, mobile money growing around 2007. And I was always watching that because like, oh, maybe Africa figured out something else that worked for the continent, that worked for the country and what they needed. And of course, when you hear the story about how M-Pesa created, that is just pure need, right? Innovation for pure need. And I knew Haiti needed that. And interestingly enough, again, the M-Pesa model was the first mobile money solution in Haiti. So you have that cross-pollination a bit of the lessons that are sometimes first in Africa and how that impacts the rest of the world. I think that's very important. And second is also Africa is so young. I tell people Ghana is the oldest free country on the continent, and it is younger than my mom as a free country. And my mom is still alive, right? So, what we're witnessing is honestly a choice of how to leap forward. You have option one on whether you look at the traditional financial market and say, let's build on top of what we have. And I think you will continue to need that for a while. But there's also a clear choice that technology is introducing that actually might make a lot of sense for Africa, for emerging markets, on bypassing the legacy and chronic limitations that they've had. But if you were to look a little bit outside and to say, what about the developed countries? Is it only for Africa? Is it you're looking at today how the US is kind of floating around the idea of using blockchain technology and digital assets to drive monetary policy in addition to bring transparency to government. And that's the really big revolution around the technology that enables the Bitcoins, the digital assets that we're talking about right now. At the fundamental level, it is groundbreaking, to be honest with you. And I don't think people really quite yet understand. We're still discovering. I feel like we have our little world that we have imagined and that we're looking forward every day to bring to reality. But that's just a macrocosm of what's possible. I really believe that. The idea of new value creation, new ways of creating value. Some of the examples that we're seeing come up in the conversation is, okay, currency, cash is paper today. Could it be better used as a digital version of it? Meaning you don't need a bank account to have cash, but you can use it digitally. You can use it cross-border. It's trusted. It's a currency. It's not a deposit account. It's cash. And then from there, what if a central bank has gold and they have a volatile currency? There's a very interesting value proposition there. What if you're El Salvador and you need to borrow funds? Usually you go to the IMF to get very high rate and big handcuffs. You buy Bitcoin and then you turn around and say, I have collateral, and you can negotiate better terms and get capital funding and economic development funded differently. I think it's a very exciting time, to be honest with you. I could talk about this forever.
And actually, I do think that if you take, Africa, 54 countries, probably as many as, currencies, with the exception of a few regions like Francophone Africa, for example, huge commodities market, right, with their natural assets. And this could be both a way to make these assets liquids, right? And then on the other hand, facilitate the trade, the exchange, right? So this is what basically one of the, big advocacy topics of EMTech, right?
Absolutely, absolutely. And we see building financial markets from the root up, meaning starting with the central bank. That's what no one else was really addressing. And we've had so many people say, why central banks? Because that actually defines the rest of the ecosystem. So when you think about, yes, the commodities, the real world assets that can now be fractionally owned, it's really about digital infrastructure. That's the only thing that's missing. The digital infrastructure aspect of it, the governance, the trust mechanism, of course, the legal framework, but Africa has so many innovative areas and strongholds that I think this is an untapped opportunity that I'm convinced, with central banks as regulators and being able to work through together, putting regulatory environments together to provide stability while tapping into this source of value creation, can be magic.
So we always talk, the relationship between financial inclusion and financial literacy is always very strong, right? But if we talk about financial literacy, verticalized on this specific topics, on digital assets, like my question is almost like twofold. Is one, how do you see central banks that are traditionally, not the most, forward-looking in general? It is not the case in, developed markets, right? How do you see them, their knowledge, or like their readiness, if you want to even have this type of conversation? And what else can we do, or what can be done to raise the bar, right? Because at the end of the day, not everyone needs to be like a geek coder on digital asset and blockchain. But at the end of the day, there is, if we all know that, especially in Africa, if this is not understood and sort of embodied at the highest level, it ain't going to work, right? So what's your take on this?
The one thing that, for example, I noticed when I started traveling to the continent is how much people take education seriously. it's very valued. If they have access to it, a lot of people take advantage of it. That's why you have so many people who are, whether they can travel or not, have found ways to earn their PhDs, their doctorate degrees, and so on into different fields. So the interest is there. Second, I think I'll split up in two. So on the central bank side, very, very niche skill set that absolutely needs to continue to evolve. Because the reality here is that technology is not going away anymore. And policy cannot be made the way it was made when technology was not part of the equation. That's just the nature of it. That's the reality of it. And creating that capacity building as a default component of how you grow as a central bank, very, very important. And that's why you see there's some central banks now that are setting up fintech offices that, for example, the Bank of Ghana fintech office has a highly trained and capable team around digital assets. You see other countries have one regulator versus the other, and we're now at the center to enable multiple regulators to understand what are digital assets, what are the risks, how should they think about framework. We're not regulators, but giving them the environment for them to think through how to do that. And that comes in different ways. On the tool set, training them is one thing. We give them tool also. The sandbox is a very critical supervisory tool that says, we don't know, we can't regulate what we don't know, but we know that there are risks. How do we keep an oversight on the risk while we don't have regulatory frameworks yet? That's such a powerful combination because as a regulator now you can feel comfortable monitoring your market, but you don't have to wait for legislation and regulation in order for you to have an answer to the innovation that's happening and you can tap into that. So training, absolutely important. And there are some key models that are emerging on how central banks can better position themselves to continue to learn and build skill sets internally. And then there are technical tools that can enable you to keep up with innovation and for you to make learning as part of your culture.
Okay, let's try to go one or two levels down in a conversation for for our listeners that are, not too familiar, if you want to, especially hopefully if we're building up, a listenership in Africa. For some of them, it might be difficult to actually concretely speaking, what are the benefits, right, of some of these technologies such as tokenization, for example, or having a CBDC infrastructure that a central bank can manage.
Like, why do I care?
Exactly,
So
exactly. So I was thinking, what is the best way for you to maybe why don't you talk about like a concrete project that you guys have done? It can be the one in the Caribbean, or you pick, right? So something that actually can describe what is the actual day-to-day opportunity, at the customer level, so that we can make it a little bit concrete.
So if that's okay, I'll use two examples. I'll use an example of Bahamas on why they looked for a blockchain-based solution. Based on their understanding is that from a technology perspective, you can solve key problems that they had. The local banks, first of all, Bahamas has about 700 islands.
Hello.
Very desperate
Beautiful.
Beautiful, but not very livable. And as a central bank, you're responsible for making sure all your citizens have flow. You can imagine paper cash not being particularly helpful,
Exactly.
and that, right? And the banks are not setting up ATM machines and so on. So you have agent networks, but there's an alternative that says, can you provide a technical infrastructure? Yes, absolutely. You start getting into, what are the different pieces of the stack that you need to make sure hurricanes, offline, privacy, no double spending and so on. But you are solving the problem of having access to currency that you can use no matter where you are in the island. That's the problem that's financial inclusion by design, whether you have a bank account or not.
And the way we do it is that they basically have a wallet, right, in their phone.
Correct. If you have a phone, you can have a wallet. And the people think about Bitcoin today is that you need to find a way to go get it. But once you get it, it's very easy to transfer and use. And there's very little intermediary that's needed. You just need a wallet ID, and that's literally all you need.
So,
How
and
do you bring
I
that
can pay
simplicity?
you, I can go to the beach and pay you my fish with this island coin,
Yes.
whatever. Or okay.
Correct. And that's currency. That's very important because a lot of people, like you said, don't wake up every day thinking about what central banks do. What's the difference between cash and my bank deposit? Well, for one, you have to go get a bank account, right? When you don't have a bank account, you can still have cash. And cash is currency compared to a deposit account. Cash is legal tender. No matter where you go, somebody will accept it. Versus if you write a check from your bank, the other bank might say, no, we don't know if there's money in there. We might not take it. That's the difference between currency and deposit products. But then the second example that I'll use, right, is when we did the ECD hackathon with the Bank of Ghana. One of the use cases really reinforced for me is the way you communicate CBDC is at the very close granular use case level. I love the use case around government payments, and we're also having this conversation here in the US, but that was the winning app or concept, right, that was built around the ECD token. So what did we do in the ECD hackathon? We created a platform with a blockchain-based a distributed ledger technology called Hedera that enables, simplifies the tokenization and the representation of a currency. And when you're a central bank, you don't technically need something in reserve to issue currency. You by default, you are deemed an issuer by law. And so you can issue a currency. So issued a sample currency and said, here's the platform on when you can get an account with the central bank and you can get a wallet as an institution. You connect, you go on the website, you request your wallet, central bank gets the request, approve it, you are in, you have a wallet, and then you get tokens distributed to you. So from there, as an institution, you're ready to go. The central bank is done.
And the token, of course, in this case, are backed by fiat. So it's stable coin principle, right?
It is even better than stable coin. It is currency. It is a currency token.
Because it's natively emitted by the central banks, right?
That's right. That's right. So you could call central bank zero currency or digital cash as a central bank issued stable coin. And that has a legal nuance to it that's not always visible versus privately issued stable coins that are either USDC, USDT. And that's great, right? So you have different currencies and you have local currency, but that local currency is very important. Now you have a new payment infrastructure for your country, right? And you as a government, if you're going to make payments to your people, you get all the banks and all the fintechs that have consumers and you say, connect to the infrastructure. We're not going to issue checks anymore or give paper cash anymore. Everybody has an account in the country. Everybody has a wallet, inclusion by design. We don't need to know KYC and AML. It's your job to do that. But here's the currency to make those transactions flow. And you can go and build on top of that.
And I also suspect that make this island of new currencies interoperable is way easier than make Naira and shilling interoperable, right?
That's correct. And you what gives you the interoperability now is one, at a technical level, you can make it work like Bitcoin. Regardless of where you are, at the code level, it is interoperable. And being able to talk to other tokens, you have exchanges, you have different mechanisms now, much leaner than what you have today, like correspondent banking and so on. But as a central bank, making your token accessible, available to exchanges, available to institutions at a cash wallet, very easy to drive adoption. But we've seen some errors as well that have really kind of stop the progress from being visible, if you will. When it comes to competing with your ecosystem, a central bank should not look to provide retail products. They provide currency, let the ecosystem build on top of it, give them the liquidity and the risklessness, and watch them build new value.
If you had to like predict what is going to happen in the next 6 to 24 months, do you see this the classical like inertia that one day a little bit like what happened with M-Pesa, right? So M-Pesa got like to 13 million users before the regulator actually woke up and say, oh wow, there is this thing, we better do something with it, right? So is this a model, or is like a collective sort of an ecosystem realization, right? That has to happen, because that's not something that can, have a single player, right? So how do you see this evolving?
I see this evolving actually through two work streams. On one side, remember the central banks are also regulators of the fintech or the private virtual asset, digital asset service providers. So they're seeing the pipeline coming and the type of products that are coming. And then they also can issue the currency that can be used as part of those products. That's where the resilience really shines, right? As a central bank, you can do both. You want to solve for financial inclusion. You want to get better, lower your money laundering and fraud. Can you provide a more modern infrastructure where you issue the currency and you let the ecosystem on board? I don't think you're going to see a scenario. Well, I can't speak for every country, but I think at the central bank level, because this is not only a new product being introduced, or it's not limited to telecommunication network, there's a broader ecosystem play here that ends up on both sides of the central bank's view, right? So it's on their radar. Do you approve new virtual assets coming in? And then the rest of the currency and the market is not there. What are the risks that now you have to manage, right? Do you let the banks provide banking services to those new guys? Do you give them access to central bank? So I'll leave you with this. There's a very interesting bill that is proposed right now. And there's a bill in Kenya for virtual asset service providers that covers from capital markets, payments, and so on. And then there's a bill in the US that introduces to legalize stable coins. And in the US, you might hear no CBDC, no CBDC. But when you kind of peel the onion, what you end up realizing, and which a lot of people don't realize, is that it all rolls up. If you roll up the onion enough, you end up at the central bank.
Yeah, I get it.
Right, because that's where the currency lies. So I think it's going to be very interesting on how those new mechanisms are allowed. I'm excited about the idea of CBDC being reserves for private stable coins, because there's more volume. Central banks are usually a fraction of the whole financial market, but they provide that anchor. And then I'm really excited about the regulatory movement, the regulatory progress that we're going to see around digital asset service providers. We're working on a few things right now that I can't share publicly, but I woke up this morning really smiling, put it that way, for Africa.
And I think that as the last point, you mentioned Kenya, which together with Nigeria, and you mentioned Ghana, they are at the forefront, right, of this type of conversation for a number of reasons that are simply also related to like the critical mass, and the gravitas that they have in the continent. So, but I know for a fact, because some of this conversation we did together, we spoke with a number of central banks across the continent, even of countries that are, still a nascent, fintech ecosystem. Do you think that the fact that, you sort of arrive as a pure innovator, starting this conversation in a place where like everything is possible and there is a bit of less legacy is an advantage or a disadvantage. So do you see, and of course I don't want to name countries because it's complicated, but do you see like a frontiers market going faster than mature market in this space?
It depends. It depends. We're testing something that we call an central bank influencer factor.
Okay.
There are central banks that are smaller, but they are trusted by other central banks. And there are central banks that are larger, but when they see smaller central banks do, and they move, right? And the fact that we work with both, we see the dynamic between both. But the beauty of it is that there is an underlying agreement and understanding that Africa ultimately will have to come together. It's been very difficult, and a lot of people are asking why this can't happen. But I think at some point, if the case is made, I really believe in putting something in front of people and for them to react to it. They can't say yes, they want to do something that they've never seen. Put a vision in front of it. So for me, I consider us pioneers in this sense, right? We don't have to see as a team, as a culture, as a value, we don't have to see it to build it. We'll imagine it and we'll build it. We'll understand what our customers want and we'll pioneer in that way. But the training has to be there. The knowledge base have to be there, building the skill set. I think that's very exciting as well. It's not visible, it's not revenue generating, but it's an enabler. It's a big enabler.
If there is one thing I'm sure about is that to be an entrepreneur and an innovator in Africa, you have to be both like driven by a bigger goal, that your own idea. You have to be passionate by the impact. Money is, of course, building wealth is a great driver. But what fascinates me is that this common denominator of the true innovators in Africa, they have a way richer, let's say, arrow of motivators, of drivers, and you clearly have all of them, which is actually is very simply one of the main reason why I wanted you to open up this series. And whilst you were talking, let's try to do something like this. So tell me one topic that is not the one that you're like dealing every day, but as someone who knows the continent, one topic that you think Breaking Banks Africa should pay attention to.
I think if I were to narrow down two key issues that I know Africa has been struggling with is trust, and in a more tactical sense, currency fluctuation, the instability around financial markets, right? It impacts so many other things, whether it's cost of capital, just everything. I'm really excited about the fact that we're starting to map out. I'm having deja vu because I was at IBM in 2017 mapping out stable coins, and now we're talking about stable coins. What I'm mapping out now, which I think is going to happen in the future, is how monetary policy and how answers to those questions lie in Web3 and tokenization and using blockchain and that value creation component. I think there are some big answers laying ahead. I'm really excited to start mapping this out with some central banks. Imagine if you could tap in trust and stability.
Yeah, absolutely. The reason why I asked you that question is because we will try to have a sort of a fil rouge between one episode and the other, and I want, if possible, that everyone that comes to the show sort of is able to talk about what's really close to your heart in this case, but also to share the experience of all the conversations that you're constantly having because you spend a lot of time in Africa in helping us shaping what the good dialogue of this podcast.
I am so happy to have you as a partner in that journey. I think it's going to be great. When it comes from the heart, it is so much better. We're not worried about what's in it for us, it's so important to have that genuine, clear-mindedness, sober conversation to try to find real solutions.
Carmelle, thank you very much for being with us.
It's a pleasure. Thank you, Matteo.
Guys, episode 1, Breaking Banks Africa, that's a wrap.
Thanks for listening to Breaking Banks Africa, a Provoke Media podcast in cooperation with Timepledge.org. Don't forget to share us out or shout out across social media. If there is something or someone you would like to hear on our cast, let us know. See you next month on Breaking Banks Africa.